watch list here, and I'm on the daily time frame. And let's look at a few stocks to see what we can do with Bollinger Bands. Now, everybody's aware that the BB bands are basically they have got an upper band, lower band, and a moving average here. So this is the 20 moving average, and this is two standard deviation from the moving average. So what this means is, has the price moved two standard deviations away from the mean, either on the upside or on the downside? This standard deviation is a concept that's taught in maths, and you must have covered it by the time you finish your 10th standard, or if you're currently studying, you'll know what standard deviation is. In simple language, it just means that what is not normal or deviating away from the normal. So, for example, if somebody is walking with 2 feet and somebody walks with 1 feet, that would be a standard deviation of one. And if he uh, even with 1 feet, if he's hopping and not stepping on his entire foot, then you would call it a two standard deviation. Just giving an example. Don't take it literally. So it just means something away from the normal, how different it is from what is normally usual. So if you look at Tata Steel here on the daily time frame, price is going up here and it reaches a particular state with good volumes, and then finally price gets exhausted, then it goes down for a bit, and then it consolidates here and goes up for a bit. So what can we do with Bollinger Bands? So what people normally do is they feel that they can use the Bollinger Bands to short when the price is somewhere here, because most of the time most of the time what people do is they will short somewhere here and they'll hope to get a target here, and when the price touches here they'll go long here hoping that they'll get a target somewhere here. You can do that if you want, but you should not do it just because the price is closing somewhere close to the Bollinger Band. That means it's time to go long, because if you did the same thing here, you would have it would have taken out your stop loss if you did it here, here, here. Because when the price is in a downtrend, just because the price is basically close to the lower Bollinger Band and you go long, that doesn't make sense, right? So you have to use the Bollinger Bands more. Bollinger Bands basically is an indicator that measures volatility. So if you see here, volatility has contracted here, and if you see here, the ATR is 4.27, and when it expands here, the ATR is 5.33. Then again, the Bollinger Band cracks here, and then it looks like a small intestine or long intestine. Take your pick. So how can we use the Bollinger Bands more effectively? We can use Bollinger Bands along with other indicators or price action to basically set you up for a better trade, better probability of making money in the market. Now, let us see here. Price has been consolidating here for a bit, and then price goes down. But this is like neither here nor there. There is no clear moment here. So let's go to another chart. Let's go to ITI. Now, if you see here, price. Let's zoom in. Price has gone up, and now it's consolidated. So if you were somewhere here and here, you would just add it to your watch list, and then you would do something like this. Basically, in a consolidation, and you wait for this to see whether the price goes up or down. There are only three places the price can go. Either it can go up, sideways, or down. Once price is broken out of here and price is hugging the lower Bollinger Bands, what you could do basically is you if you wished, you could have shorted below the low of this candle if you're doing futures or intraday. I mean, the time frame will obviously change, but since I'm explaining, I'll obviously go with a single time frame to help you understand how to use BB bands effectively. You could have gone low below this, and you could have kept your stop loss somewhere on a little above this 20 moving average. Uh, And if the SL is too much, then you can keep it, give it some buffer above the high, and then you would have been riding the trend for a very long time. This is one way to use Bollinger Bands, right? Wait for the squeeze and let it break out of this consolidation, and it's always going to be a rectangle because it's sideways, right? That's why it's consolidating. Either it goes up or down, or it continues to go sideways. So it breaks in a particular direction and it's hugging the lower band because it's down, or if it's hugging the upper band if it's up. Uh, you could obviously take a trade. Now let's suppose that you were doing something else on that day. You had gone for a party and you were busy with your office work and all, and you just missed this move. And now that you see it, you're really very unhappy and you don't know what to do. Now you want to get in on the move. Everybody's making money. You feel left out. Everybody's having gulab jamuns and rasgullas, and you're only getting ghee tori. So what you want basically is you also want to have rasgullas. So you would wait for price to come close to the middle band here because you know price is broken out of consolidation is in a clear downtrend. You wait for price to come somewhere close to this middle moving average, and then you would basically, uh, if you are observing the market in real time, you would see the price has touched here. You could have placed a limit order somewhere here, a few limit orders here, depending on when if the price ever came close, and suppose you're not watching, right, you're in office, your order would have gotten filled in. So if you place the limit order here, you would have gotten filled in. Now let's look at another chart here. We work Man Aluminium. Man Aluminium, again, it's on the daily time frame, and again you see a long period of consolidation. So what we can do is we can add it to the watch list, and there we see price breaking out with a massive volume. Here, if you see this, the volume is of course above the 20 period volume. So what you can do is, if you're out of the market not watching it, you can place an order above the high here, and then you can keep your stop loss below the low of this candle, or if the SL is like, if you want a little more breather, then you can keep it below this 20 moving average, this Bollinger Band medium. You can keep it a little below here if the SL is not too much for you. And then if you see here, prices swung back for a bit here, and this is basically gone up, and you would have made a lot of money. And then if you trailed your SL, you would have probably been taken out somewhere here, but then you would have made a lot of money here. So this is how you can use Bollinger Bands, but not only on the squeeze. You use the squeeze, you use the volume, you use price action. You're seeing RSI also is basically moving upward. So you have a confluence of factors, and you can use Bollinger Bands to effectively increase your chances of spotting a squeeze and getting in on a trade. Now let's look at one more chart. See, again, we have the squeeze. Let me remove the drawing that I've made. Again, you have this huge squeeze, right? Squeeze is consolidation. Here, basically, what's happening is you have accumulation, you have accumulation here followed by advance, and then this could either be distribution, or if it goes up, you'll again call it accumulation. So basically, you have a base here, and then again you have a nice candle here, which is broken out of the consolidation, a high above this, keep a low below the low of this candle, or if you want more buffer, depending on your risk taking capacity, below this Bollinger Band median, and price is hugging and it keeps going up, and the RSI is also supportive, and you can see the volatility also rise. So you would have made good money, and then you keep trailing. So for example, if you're still here and you trailed it here, right, you're still not out of the trade and you're still making money. So from 840 you have gone to 1078 and still in the game. So I hope you learned something good about Bollinger Bands. Remember, this can be used for intraday trading as well. You can go down and look at it on the 15-minute time frame. You can look at it on the 1 hour time frame. You can use it for futures and options, and depending on what time frame you're comfortable with, overnight or daily square off. Now, if you're really interested in making money from the market, then what you need to do basically is work with a mentor like me, who's actually taken hundreds and hundreds of trades in intraday and swing trading, who actually knows what he's talking about, and who can mentor you, clear your doubts, and you can work with a community of traders, allowing you to basically benefit from each other's experience and start you and handhold you on your journey to success. So if you're really interested, I have a 2 hour webinar this coming Saturday at 12 p.m. The link is in the description. Feel free to join, and thank you for watching. If you haven't subscribed to my channel, do so already, and I'll see you on the other side. Thank you.